Welcome back to Stock Talk, everyone.
Good to be here.
Glad you're tuning in for the kind of focused financial analysis we aim for. If you like getting straight to the point, definitely hit that like button, share your thoughts in the comments, and subscribe so you don't miss these deep dives.
Absolutely. Helps us keep doing this.
Today, we're digging into BioNTech's first quarter 2025 results. We're working directly off their report from May 5th.
That's right.
Our goal, pull out the key insights, maybe some surprising details, and, what it all means for BioNTech going forward without drowning you in the full report.
We'll cover the financials, R&D progress, strategic moves, and their outlook for the rest of 25.
Okay, let's jump right in. Financial health, what's the overview?
All right, so for Q1 2025, revenue came in at $182.8 million.
Okay.
That's actually down a tiny bit, 2.6% compared to the same time last year, which was $187.6 million.
A slight dip. What about profit? Or loss, perhaps?
Yeah, loss is the word here. The net loss, it widened quite a bit, jumped to $415.8 million.
Wow, okay. Up from what, last year?
Up from $315.1 million in Q1 2024. And the main driver, they state pretty clearly, is increased spending on R&D.
Right, investing in the future pipeline. So revenue down slightly, loss up significantly. But are they okay for cash? Does this loss put them in a tight spot?
No, not at all, actually. Their cash position is, well, it's exceptionally strong. We're talking $15.9 billion in cash and investments.
$15.9 billion.
Billion, yeah. If you break it down, it's about $10.2 billion in actual cash and equivalents, then $3.5 billion in current security investments, and another $2.1 billion in non-current ones.
Okay, so that kind of loss, while notable, isn't an immediate liquidity crisis given those reserves.
Exactly. That huge cash pile gives them enormous flexibility. It's, absolutely crucial for funding that ambitious strategy, especially the push into oncology. They can afford to make these big R&D bets.
That makes sense. It puts the loss in context. So let's dig into those other financial metrics. You mentioned the R&D spend was the main reason for the bigger loss. How much did it go up?
Right, R&D expenses rose to $525.6 million. That's a 3.6% increase compared to last year. And it really just hammers home their commitment to advancing that oncology pipeline. That's clearly where the focus is.
Okay. What about other expenses? Were they trimming costs elsewhere?
Interestingly, yes. SG&A expenses, selling, general, and admin, they actually decreased, down 9.1% to $120.6 million.
How'd they manage that?
The report says it was mainly due to spending less on external services. So it looks like some targeted cost management, perhaps focusing the spending firepower purely on the science.
The strategic allocation then?
Yeah.
Heavy on R&D, tighter on the admin side.
Yeah.
What about the cost of actually making their products? Cost of sales?
That one went up. It hit $83.8 million compared to $59.1 million in Q1 last year.
Why they increase there?
They mentioned a factor from the previous year. Apparently, in Q1 2024, they had a benefit from an inventory revaluation that didn't repeat this year. So that makes the comparison look a bit steeper.
Oh, okay. A one-off effect last year making this year look higher. And earnings per share?
Well, the loss per share was actually slightly lower, but honestly, the headline figure everyone's looking at is that overall net loss. It really tells the story of this investment phase.
Okay, picture emerging. Prioritize R&D for long-term oncology goals, funded by strong cash reserves, leading to a current net loss while managing other costs.
Yeah.
Makes sense. Let's pivot to that R&D. What are the operational highlights? What are they actually spending that money on?
Right, the highlights are definitely centered on oncology. First up, BNT327. That's their bispecific antibody.
Bispecific meaning it hits two targets.
Exactly. This one targets PD-L1 and VEGF-A. The idea is a more potent targeted attack. They shared some preliminary phase 2 data.
How'd it look?
Pretty encouraging, apparently. This was in small cell lung cancer, both extensive stage and second-line treatment settings. They saw anti-tumor activity and, importantly, an acceptable safety profile.
Good signs. So what's next for BNT327?
Based on that data, they're moving it into global phase 3 trials. Big step. And here's something potentially quite exciting. At the AACR conference, that's the American Association for Cancer Research, just recently, in 2025, they showed initial data combining BNT327 with some of their ADC candidates.
ADCs, antibody-drug conjugates, the sort of smart bomb cancer drugs.
Precisely. Delivering chemo directly to the cancer cell. Combining the bispecific antibody, which sort of wakes up the immune system and targets tumor growth factors, with these ADCs. That combination approach could be really powerful. It's early days, but a key strategy to watch.
Yeah, hitting the cancer from multiple angles. That does sound promising. What else is moving forward in their oncology work?
Well, their mRNA cancer immunotherapies are also progressing. They talked about promising phase 1 results for BNT116.
That's one of their mRNA vaccines, but for cancer.
Exactly. Using mRNA to teach the immune system to recognize cancer antigens. This data was in non-small cell lung cancer, specifically in frail patients, which is often a tough group to treat.
Hmm. And the ADCs themselves, you mentioned they're combining them with BNT327, but how are they doing on their own?
Good progress there, too. Their ADC portfolio has a couple of key candidates. BNT324, also known as DB1311, got Fast Track designation from the FDA.
Fast track that helps speed things up, right?
Yes, speeds up development and review for serious conditions with unmet needs. This was for advanced castration-resistant prostate cancer. It also got orphan drug designation for esophageal squamous cell carcinoma.
Orphan drug for rare diseases.
Yeah.
Okay. Any others?
Yep, BNT325, or DB1305. That one also received Fast Track designation, this time for platinum-resistant ovarian cancer, another area needing better treatments.
So multiple regulatory nods acknowledging the potential there. That's significant.
Definitely. These designations can really smooth the path to market if the data holds up.
And wasn't there a big acquisition related to all this?
Absolutely. Very important strategically. Back in February 2025, they closed the deal to acquire BioNTech.
BioNTech. What was the price tag on that?
Pretty hefty. $800 million up front, plus potential future milestone payments.
Wow. What did they get for that?
They got full global rights to BNT3227, remember, the bispecific antibody we were just talking about. That actually originated with BioNTech.
Ah, so they brought their lead candidate fully in-house.
Exactly. Plus, they got the rest of BioNTech's pipeline candidates and their antibody generation platform technology.
So not just the drug, but the tools to make more drugs like it.
Precisely. It really bolsters their internal capabilities for discovering and developing new antibody therapies. A key move to strengthen that oncology focus long term.
Makes sense. Big investment, but seems tightly linked to the overall strategy. Now, we can't forget the product that made them a household name, the COVID-19 vaccine. What's the latest there? Is that still a big part of the picture?
It absolutely remains a crucial part of the business, especially for revenue right now. They successfully developed and got approvals for the updated vaccines, targeting newer variants like JN.1 and KP.2.
Right, the ones with the recencies.
Yep, approved in over 40 countries. Now, the focus is shifting to preparing for the next season, the 2025-2026 one. Commercial launch expected ahead of that.
And how does that feed into their financial guidance for this year?
Well, their full year 2025 revenue forecast kind of assumes things will be relatively stable compared to 2024 in terms of vaccination rates, pricing, market share.
So projecting a similar level of COVID vaccine business.
Broadly, yes. But they did add a note of caution. They're factoring in the possibility of inventory write-downs by their partner, Pfizer, that could potentially impact the final revenue numbers.
Okay, so it's still providing significant income, but maybe with some variability depending on inventory management by Pfizer.
Exactly. And, you can really see it as the COVID vaccine revenue providing the essential fuel, the financial stability to power those really ambitious and expensive oncology R&D programs.
A bridge to the oncology future, funded by the present.
That's a good way to put it.
The report also laid out their oncology strategy in terms of 3 pillars, I believe. Can you break that down?
Yeah, they framed it clearly around 3 core pillars. Pillar 1 is those next-generation immunomodulators, with BNT327, the bispecific, leading the charge.
Yeah.
Pillar 2 is the mRNA cancer immunotherapies, like BNT116, leveraging their well-established mRNA tech for cancer.
Right.
And Pillar 3 is the antibody drug conjugates, the ADCs, like BNT324 and BNT325, the ones that got fast track.
Immunomodulators, mRNA therapies, and ADCs. Got it.
And crucially, as we touched on, a big part of the strategy is combining these approaches. That early data on BNT327 plus ADCs is a perfect example.
Synergies between the pillars.
Exactly. So for anyone following the company, upcoming medical conferences like ASCO 2025 will be really important. That's where we'll likely see more clinical data readouts, which will be key for judging if these therapies are truly commercially viable down the line.
Lots of potential catalysts to watch for. Okay, let's circle back to the full year guidance. What are the headline numbers they're projecting for 2025?
Right. So for the full year, they're guiding for total revenues between 1.7 and 2.2 billion.
1.7 to 2.2 billion.
Yeah. And they did specify they expect a lot of that to land in the last 3 or 4 months of the year.
Which makes sense with COVID vaccine seasonality, right? Fall-winter campaign.
Exactly. Now compare that revenue to the planned R&D spend. They're forecasting 2.6 to 2.8 billion on R&D.
Wow. So spending significantly more on R&D than their total expected revenue.
Precisely. It just underlines where the strategic priority lies. SG&A expenses are guided at 650 to 750 million, and capital expenditures around 250 to 350 million.
And the bottom line impact of all that spending.
Well, they stated very clearly, they do not expect to report positive net income for the full year 2025.
Okay. So the Q1 loss wasn't an anomaly, it's the plan for the year.
It's the direct result of these massive necessary investments into building that oncology pipeline for the future. It's crucial context for interpreting that loss.
Absolutely. Investment phase, not profit phase for now. Okay, thinking about this whole picture, the strategy, the spending, the pipeline, what are the big opportunities, and conversely, the risks investors should be aware of?
Okay, on the opportunity side, you've got that promising early clinical data, especially for BNT327 and the combination ideas. That's huge potential. The multiple regulatory designations, fast track, orphan drug, they suggest the regulators see potential too in areas needing new options.
Right.
Then there's the massive cash reserve. That gives them incredible flexibility for more R&D, maybe more acquisitions, weathering setbacks.
War chest.
Exactly. And they have a real shot at becoming leaders in bispecifics and ADCs, which are hot areas in oncology. Plus, it's a diverse pipeline overall.
Sounds compelling. What about the flip side? The risks.
Well, there's still some reliance on the COVID vaccine market, which, could fluctuate. That high R&D spending is great for the future, but it means no profits now, and there's no guarantee every bet pays off.
High burn rate.
High burn rate, exactly.
Right.
Oncology is also incredibly competitive, lots of big players, lots of innovation. There are always regulatory risks. Trials can fail, approvals can be delayed or denied. And ultimately, they need to successfully commercialize these oncology drugs. Their goal is by 2030. That transition from R&D powerhouse to commercial oncology company is the big hurdle they need to clear.
So definitely a high-stakes game, potentially huge rewards, but significant challenges and risks along the way. As we wrap this up, what are the absolute key takeaways for our listeners from this Q1 update?
Okay, number one, BioNTech is all in on transforming into a major oncology player by 2030. This isn't speculation. Their actions and spending confirm it.
Strategy is clear.
Number two, their cash position is phenomenal. It gives them the power to execute this strategy aggressively.
Financial muscle.
Three, the pipeline is advancing, showing promise, especially BNT327 and the ADCs, plus the combination strategy. Early signs are positive.
Pipeline progress.
Four, the BioNTech acquisition was a really key strategic move, boosting both their pipeline and their discovery capabilities.
Strategic acquisition.
Yes, they're operating at a net loss now, but understand why. It's a direct result of the deliberate, massive investment in that oncology future.
Investment driving loss.
And finally, number six, keep watching the transition. Moving away from COVID vaccine reliance toward a sustainable oncology business, that's the core story unfolding right now.
Okay, great summary. BioNTech is making huge bets on oncology, backed by serious cash, and the current financials simply reflect that long-term strategy in action.
That's the essence of it.
So here's something for you, the listener, to think about. Given that strong cash position, given these ambitious oncology goals, what might be the next big strategic move? Another acquisition, a partnership, or maybe the next major clinical breakthrough that really shifts the narrative? Definitely something to ponder.
Good question to leave people with.
Thank you for joining us for this deep dive into BioNTech's Q1 2025. If this analysis was helpful, please do like, comment, and subscribe to Stock Talk. We'll catch you next time for more focused financial exploration.
Thanks, everyone.